Hi guys, my name is Bet. Today is the January 18th, Thursday 2024, and let's get back to our regular analysis of swing trading. Okay, as you guys already know, I always start with the 4-hour chart of the USD index to determine the overall strength of the USD dollar. So again, we have market has been consistently behaving above the moving average, 89 period the moving average. That means the dollar is strong. That means dollar is strong. Okay, let's analyze our first pair, USD Japan yen. Okay, so if you guys have followed my advice from the few days earlier, we had a nice nice up leg from here to here and here to here. Nice up leg. Let me use drawing from here to here. Then market retraced around the Fibonacci 0.5 and 0.68, which was a perfect time to buy USD Japan yen, and then you should take a profit at 1.618 right here. So personally, I waited the market to retrace once more again into Fibonacci 0.38 just for a better risk and reward ratio, and I miss it at that there. But that's totally fine. Usually market once you see this support green candle up here, then market usually go back to the original retracement. That's a perfect place to place the limit orders. Then market usually returns into original trend and hits some Fibonacci extension. But that's totally fine. I just waited for a I could have entered around the Fibonacci retracement 0.5, but I waited for 0.38 retracement just for a better risk and reward ratio. It's every trade has its own trade-offs. So here I missed the chance, but if you followed my advice from few days earlier, and you could have entered this Fibonacci retracement area and would have hit a nice Fibonacci extension, take profit at 1.618. So let me remove all this drawing. So what's our current analysis? So current up leg is from here to here, and I'm waiting for the market to retrace between in this nicely good this good zone for retracement. Then I'm gonna buy USD Japan yen into Fibonacci extension 1.618. Okay, so this current up leg is that you see guys, it's not too big, it's not too small compared to the other directional up and down legs, so it's an ideal size. By meaning that it's likely to demonstrate Fibonacci extension if the current trend continues. So that's what I mean when I say nice leg size. Okay, so let's write it down. USD Japan yen trend is up, leg is nice, and our current decision is to wait the good zone. So as you guys already know, if you have been following my videos, I have already sold Aussie, risking 0.7% of my account. That means that I have an additional 0.3% of my account to risk just for an additional position. So I would like to have at any in general I would like to have two bullets. First bullet is the safest risk and safest I would say the minimum possible a good zone that has a good risk and reward ratio, and I risk 0.7% of my account. If market retraces more into more better zones with less probability, then I would like to risk additional 0.3% of my account for the second bullet. Okay, let me drink some liquid. Okay, next pair. USD Canada dollar. Okay, so we have this up movement going on here. Dollar is strengthening in loonie. So you see this up leg has really big sides. You compare to the other legs, other up and down directional legs. This leg size is really big. So it's unlikely that these big sides will demonstrate Fibonacci extensions. So usually what will happen is that market retraces into 0.5 or 0.38 this Fibonacci retracement, then it will reach back and make a new top, then retraces, then return into original trend. So I'm waiting to market to hit at least the 0.5 so that I can trade so that I can buy loonie. So again, in this case, the risk and reward ratio, it's not like a 1 to 2 or 1 to 2.3 like these other trades, but usually when it's like this many leg size is big, then usually it will come back into original trend and hit a new local maximum. So risk and reward ratio will be 1 to 1. But again, still we are trading along the trend, and again overall my trades have 70% success rate. So just math wise, it's a decent trade. It's not a great trade, but it's a decent trade and it's worth taking it. Okay. So let's write it down. Loonie USD Canada dollar trend is up, leg size is too big, and I'm waiting at least Fibonacci retracement 0.5 for the 101 risk and reward ratio trade. So again, it's not the greatest trade, but it is still a decent trade and it's worth taking it. Okay, USD Schweizer franc. Again, the story is same with the loonie. So we have this up leg is going on here. Trend is definitely up in this case, and this leg size is considered to be big. You see, compared to the other legs, other directional legs, it's like it's a big leg. It's a big leg. So again, I wanted to retrace at least a 0.5 or a 0.38 Fibonacci extensions. Then I will start buying it and hit my take profit at the level 1. Okay, let me clear the drawing. USD Schweizer franc trend is up, leg size is too big. It's not gonna make a Fibonacci extension, but I'm waiting at least 0.5 retracement for the risk and reward ratio 1 to 1 trade. It is still a decent trade, guys. Okay, pound USD. Again, the behavior is, you see, the market is behaving up and down, back and forth between the moving averages. There is no actual good trend. So when there is no trend, there's no need to trade that pair. So pound USD, there is no trend. Market is behaving sideways. So our decision is to do nothing. Okay, Euro USD. Nice. Okay, so originally we had this nice down leg, and it retraces into nice position, and I expect it to reach at least 1.61 Fibonacci extension like that. But currently we also could be having one potential new down leg, but I'm not confident. I'm not convinced about this leg size. You see, if I take this current leg size and compare it to the other directional leg sizes, it is still considered the small leg, right? It is still considered a small leg. Compared to it, It's just a small leg. So I don't expect it to. It could be still part of the overall retracement movement. You see the retracement movement here, from here to here, here to here. It could be still the retracement like this, enter a new retracement zone around 0.5. Then it can go down and reach the Fibonacci extension. That's very likely to happen. So I'm not really I still have 0.3% available, but usually what market can also does is that it can go like this. It could be a directional move, then make some retracement, then it will go down and hit a point Fibonacci extension 1.618. So as long as there is no 10 candles closed above the moving average, we should be go. So again, I'm not totally sure. I'm not feeling confident about this being the directional leg. So I will just probably wait out, or if I want to risk, I will just risk a remaining 0.3% at a really good level here at 0.5 or 0.618. So again, I wouldn't recommend that. And if it retraces into 0.618, but I will just sell, but 0.3%. But overall, I wouldn't recommend that. It is still, by my standard, it's not the great trade. It is still a decent trade, I would say. But let's see how the market will unfold. Okay, so Euro USD down, leg size is small. I'm not confident about the leg, and if it really retraces into good zone, at least 0.618, then I'll risk remaining 0.3%. That again, it is still a not great trade, and it is a decent trade, but decent trade means that mathematically it will give me some result, positive results. Okay, Australian dollar USD. Okay, so if you guys have been following my advice, we had a nice first leg like this, then it retraced into nice zone, then I sold my first bullet, right? So from then it has been accumulating nice profits, and I expect it to reach at least 1.618 Fibonacci extension at the price level 1.65. So this trade is still going on, and we have the second directional. We have this movement, right? From this, retrace it, and this, right? But any given time, if the market retraces back into at least the 0.618 level here, then it also creates an additional opportunity to sell. So if the market reaches around this zone between the 0.5 and 0.618 here, I will sell my additional 0.3% bullet. So again, still my take profit would be 0.65. Okay. So let's just see. So wait 0.618 of the new leg for risk and reward ratio 1-to-1, and keep the current position. Okay. So roughly, if I enter a trade here, and I'm gonna put my stop loss around here, and my take profit would be here. Original 0.65 at the Fibonacci extension 1.618. So it's roughly the risk and reward ratios. It's roughly 1-to-1. So again, it is still not a great trade, but it's a decent trade that have positive average overall. So again, it's up to individual traders' personality, and I'm a type of a trader that will put my most positions 0.7% of my first bullet at the decent on the great trades. And if there is a decent opportunity, it's not great, then also I'm willing to sacrifice my risk my second bullet of 0.3% of my account. So I'm that type of trader. So for me, it matches my trade. At any given time, if everything goes wrong and goes against me, at most I'll be losing 1% of my account. Okay, but who knows? Let's just see. That's how I read the market currently, and let's see how market will unfold next few days and what kind of opportunities that it gives. Well, for now, it gives us not great opportunities, but decent opportunities, and we will see. New Zealand dollar USD. New Zealand dollar USD. Okay, nice. So we have our original down leg like this. It retraces into good zone, then it's going down, and it is expected to hit Fibonacci extension 1.618 here. And we now we have also the new down leg is forming. If this leg retraces into Fibonacci good zones like a 0.618 or 0.5 around here, it's an additional opportunity to sell again. So again, in this case, since it's a new leg, it should reach new Fibonacci 1.618 level. Okay, so personally, I'll be really happy if the New Zealand dollar retraces more and hits the Fibonacci level 0.6118. So again, so they are the separate directional legs. First leg here, retracement, then second leg is continuing. It's like that. So one thing I don't like about the Aussie is that on the Aussie, you see this whole thing is maybe the whole one big directional way. We never know, because the main retracement from this leg, this retracement from here, it's a very small inside. So that means that this whole movement could be the one gigantic leg. There's just no way of that. It's not clear. We just have to accept it. We never know for sure until market fully manifests. But for the New Zealand dollar, this second retracement is really nicely sized compared to first directional leg. So from here to here, first directional leg, retracement, then another directional leg, and if it creates Fibonacci retracement around here, 0.6618 and 0.38, it's likely to be the new retracement. Then new directional leg should be unfolding and hit 1.618. So that's what I'm looking for from New Zealand dollar USD. Okay, New Zealand dollar USD down, leg size is nice, and we are waiting a good zone on the new leg. So overall, looking at this, I don't see. So we have our first position on the Aussie. It is accumulating profit nicely, and secondly, I'm paying the more attention into USD Japan yen and New Zealand dollar USD, because they have formed the new directional leg. Like if they retraces into a good zone, and we will have trade opportunities at least risk and reward ratio 1 to 2, right? So I'm observing Aussie and closely observing USD Japan yen, New Zealand dollar USD, because they could offer great trading opportunities. And lastly, I'm looking at the USD Canada dollar and USD Schweizer franc and Euro USD, and if they retraces more, there is still trade opportunity, but it's not. It is still a decent trade opportunity, but it's not a great opportunity. So if the market retraces first and hits a good level on the New Zealand dollar USD and USD Japan yen, then they are my priorities. If they don't offer an opportunity. But if I see opportunity and USD Canada dollar and USD Swiss franc, I will still enter, but I will not expect much. It is still a decent trade. Okay, so I hope you guys have been following my videos, and as we expected, guys, you see, if you see my last few days of my analysis, we have been correctly determining the strength of the dollar, USD dollar, and we have been positioning ourselves correctly. If you guys watch all these previous videos. Okay, so again, it's all about probabilities, and let's see how market will unfold.